Yesterday, the entire market got smoked. Dow down almost 400 points. NASDAQ nearly 2% lower. Tech names wrecked. Palantir, Nvidia, AMD, all deep red. And Robinhood down 10.81% in a single session. This wasn't just one stock slipping on earnings. This was a bloodbath, and most investors have no idea what just hit them, because what they're feeling isn't logic, it's fear. The Fear and Greed Index just dropped to 24. Extreme fear. Worst layoff numbers in 22 years. The economy's flashing recession. AI stocks are priced for perfection, and suddenly they're not perfect. So the question is, did Robinhood just report a disaster, or did they report a record quarter and get executed anyway? Because that changes everything. If the business is breaking, you run. If the business is getting stronger, this sell-off is a gift. But most people won't figure that out until it's too late. That's why I'm doing this video, not to chase price action, but to understand what the business actually said. Because if you own Robinhood, or if you're thinking about owning it, then what you do next depends on the truth behind this report. And most people don't read the reports. They read headlines, they follow the herd, and they get smoked. Today, we're not doing that. We're going to cut through the noise, look at the real numbers, and answer the real question. Is this a red flag, or a rare buying window hiding in plain sight? Let's find out. Robinhood's reputation isn't earnings-based, it's emotional. Most people didn't walk away from Robinhood, they stormed off. And not for no reason. They remember the meme stock freeze. They remember being locked out of their trades during a once-in-a-decade moment. They remember system outages that cost people real money. The $65 million fine for misleading customers, and the ghost town that was called customer support when everything went wrong. Whether it was incompetence or indifference, it didn't matter. The trust was gone. So now, every time Robinhood has a breakout quarter, those same investors scoff. Not because of what's in the report, but because of what's still in their gut. But here's the truth. If you're still holding a grudge in 2025, that's not conviction. That's pride. And pride is the fastest way to miss a generational move. Because guess what? The stock doesn't care about your feelings. It doesn't remember what happened in 2021. It only cares about what's happening now. And right now, Robinhood just posted what looks like its best quarter ever. But here's what's weird. The very next day, the stock tanked more than 10%. So we're left with two possibilities. Either the company just dropped a bunch of red flags that Wall Street caught first, or they actually crushed it and the sell-off was just bad timing in a brutal market. That's what we're going to figure out right now. Because if the numbers back up the story and the story points to future strength, then this drop wasn't a warning, it was an opportunity. Robinhood isn't a one-trick pony anymore. It's a financial machine. Most people still think of Robinhood as a trading app. That's the mistake. They picture a casino with a swipe feature. Options, YOLOs, Dogecoin pumps, the glory days of Reddit finance. But that version of the company is long gone. The new one just printed massive revenue across every major line. Options trading up 50%, doing over $300 million this quarter. Crypto tripled to $268 million off stronger pricing and volumes. Equities doubled to $86 million with record user activity. And interest income, a quiet monster, now $456 million just from smart use of cash, margin, and lending. That's 4 core products all scaling at the same time. Not one hit, not one trend, a full stack. And in prediction markets, which are tracking a $300 million run rate, doubling every quarter, and suddenly you're looking at a different animal. This company isn't selling hype anymore. It's building financial infrastructure. And every quarter the engine gets stronger. So when someone says it's too late, you have to ask, too late for what? Too late to punish it for past mistakes? Too late to stay bitter? They're holding a grudge like it's an ex-girlfriend. Meanwhile, the company moved on, leveled up, and is now pulling in $556 million in profit. If you're still fighting the old version of Robinhood, you're going to miss the next one. You don't get $1.2 billion in revenue without trust. Not from retail, not at scale. Some people still think Robinhood users left and never came back, but the cash says otherwise. They added $20 billion in net new deposits this quarter. That's more than a third of what they brought in all of 2024. That's not meme traders, that's sticky capital. Assets under custody now at $333 billion, up 119% from last year. Robinhood Gold subscribers, nearly 4 million, up 77% in just 12 months. You don't scale those numbers unless the product is working. You don't retain users unless you're adding value. And this next part, it didn't go viral, but it mattered. These customers didn't just deposit money. They stayed, they paid, they compounded. That kind of growth, deposits, subs, assets under management, doesn't happen by accident. But for a lot of people, none of that will matter, because in their head, Robinhood already ran. It's too late. They missed it. And they'll keep telling themselves that until they see this. I made Robinhood videos in February, May, July, and August. Robinhood was trading at $50 back in February. It's now tripled. This wasn't hindsight. This was discipline, not based on trends, based on data, based on execution, based on the fundamentals. And if you think it's too late now, keep watching. Robinhood's biggest opportunity might also be its biggest risk. Expanding globally sounds great on a slide deck. 30 countries, 700,000 funded international customers, institutional expansion, Bitstamp, banking, tokens, futures. But here's the uncomfortable truth. Almost none of that has been proven at scale, yet. Yes, they've launched in the UK and across the EU. Yes, they've added 700,000 funded international accounts. A great start. Yes, they acquired Bitstamp, giving them an institutional foothold in crypto and custody. And yes, they've rolled out new products like perpetual futures, stock tokens, and even AI-based banking tools using Cortex Digest. But Robinhood still generates over 90% of its revenue from the US, and international growth, while promising, has been slower than expected. Bitstamp is a serious move, but it's not a guaranteed moat, and the institutional side of the business is early, too early to count on. Robinhood is ambitious and says it wants 50% of future revenue to come from outside the US. That's bold, but it's also unproven. This is the paradox. If it works, Robinhood becomes a global fintech platform with serious upside. If it stalls, they've burned time, cash, and focus chasing a future that never compounds. International expansion might become their most important long-term advantage, or it might turn into an albatross, dragging momentum down when they can least afford it. Right now, the market isn't pricing in either scenario. The biggest risks are the ones that used to be the bull case. Every breakout quarter has a blind spot. This one's hiding 3, and the first one hits close to home. I've been bullish on Robinhood for a while, not because of hype, not because of crypto, because of international expansion. If they could scale what they built in the US into Europe and beyond, this wasn't a growth story. It was a global platform thesis. That was the bet, and I was in. But now we've seen the results, and it's moving slower than it should be. Yes, they've launched in 30 countries. Yes, they've onboarded 700,000 funded international accounts. But for a company with 26 million total funded accounts, that's not true breakout growth. That's a long setup with a slow follow-through. I'm not backing off the potential. I'm just being honest about the execution. It's not moving fast enough to justify the weight of the thesis. Let's move to the second risk, shareholder dilution. This quarter, stock-based compensation and adjusted operating expenses came in $40 million above the midpoint of their forecast. What does that mean in plain English? You're getting diluted. They're paying people with your shares. And if you're a shareholder like me, that's a cost, even if it's buried in non-cash line items. And it gets worse, because the stock popped so fast after earnings, it triggered executive awards. And those awards led to unplanned payroll tax expenses, which hit the financials like a penalty for winning. That's the problem with sudden momentum. It's expensive if you're not structurally ready for it. And third, platform fragility. Robinhood had another AW outage this quarter, and while it wasn't a full shutdown, it degraded the user experience across the board. We're not talking about glitches. We're talking about a company that wants to be financial infrastructure and sometimes still feels like a startup under stress. You can't be the broker of the future if people can't count on you when volatility spikes. And finally, there's the macro dependency nobody wants to talk about, interest income. Right now, it's the biggest profit engine behind the scenes. But if rates fall faster than expected, that entire engine contracts. Pair that with soft international growth, platform risk, and a CFO transition, and you have a business that looks strong but still sits on a fragile stack. This isn't a short thesis, it's a reality check. And if you're not looking for cracks while the chart's going up, you're the one taking the risk. So, is Robinhood a good long-term investment? Let's make this simple. The bull case. Robinhood is no longer just a trading app. This quarter made that clear. They're building an ecosystem, not a feature. Subscriptions, retirement, banking, institutional crypto. Layer by layer, they're turning into a real platform. And most importantly, they're compounding. Not just revenue, momentum, infrastructure, trust. They're attracting more customers, locking them in with more products, and extracting more value per account. If they keep going down this road, they'll build something that's hard to compete with because it won't be one thing anymore. It'll be everything is connected. But the bear case, the moat is still forming and it's not defensible yet. Right now, Robinhood's biggest edge is reach, but reach isn't protection. Brokerages are still commoditized. Banking is saturated. Crypto is unpredictable. Robinhood's products, they're sticky, but they're not irreplaceable. And their international push, which could have created lock-in by undercutting bloated legacy systems, is moving too slowly to change the game right now. The thesis is there, but the execution's incomplete. If international picks up speed and the multi-product flywheel deepens across their user base, that's when defensibility appears. But until then, Robinhood is a business with ambition, not insulation. And that brings us to the biggest macro risk, interest income. Right now, it's the profit engine that makes everything look clean. But if the Fed cuts faster than expected, that profit line shrinks, and the rest of the business isn't ready to fill that gap. So where does that leave us? Robinhood isn't bulletproof, but it's not hype either. It's a business that's getting stronger and becoming harder to ignore. If they execute, they'll have retention, reach, and revenue diversity, all under one roof. That's a real moat. It just hasn't solidified yet. Now for the challenging questions that matter. Is this business getting stronger every quarter? Yes. Are the numbers trending up across customers, contracts, revenue, and cash flow? Yes. Is the product becoming harder to compete with? Absolutely. And that's what I bet on. I'm not here to defend Robinhood's past because they have had some serious issues. They froze trades during the meme stock frenzy. They had outages when people needed access most. They diluted shareholders with bloated compensation plans. And even now, they're still figuring out how to scale internationally at the speed the market expects. That's all true. But so is this. Robinhood just posted a record quarter and the momentum is real. What they're building now is a lot harder to kill than what they launched with. They're not riding hype anymore. They're converting it into infrastructure. And the longer they execute like this, the more that infrastructure becomes a platform, and that platform becomes a moat. But let's be honest, this stock isn't safe. This is still a high-risk, high-reward position. If interest rates collapse or international expansion falls flat or product expansion misfires, Robinhood can fall hard and fast. That's why I size accordingly. Robinhood isn't a core holding. It's a small position that still has a lot of upside. But make no mistake, my thesis is bullish, just not blindly bullish because we have to look for cracks and understand where things could fall apart. Because right now, some retail investors are still holding a grudge against Robinhood, like it's their ex. They can't let go of what happened in 2021. And while they're busy being emotional and carrying baggage, Robinhood's fundamentals are quietly compounding. Some people will say Robinhood has run up too much this year and it's too late. But too late for what? For a company that's expanding, scaling, and generating real cash? That mindset is how people miss the next leg up. They'd rather be right about the past than get paid in the future. So I'm still looking to add to my positions, not because I'm emotional, because I'm objective. The setup is still here, the risk is priced in, the upside is building, and the business is getting harder to compete with every single quarter. That's what matters, and that's what I bet on. Now let me ask you something. Who else is showing you how to break down a business like Robinhood, calling out the real risks, the real momentum, and the moves that actually matter? Who else walks you through how to size your position, spot your window, and ride the upside without blowing up your account? Nobody. That's why I've been buying this all year, while most people were still mad about 2021. In February, it was trading at $50. Now it's up about 261% year to date, and we've been there the whole way. 4 separate calls, 4 separate timestamps, and every time people said, it's too late. No, it was early. They just didn't want to believe it, and it's not just me. Steve pulled in $5,070. Ash caught a clean breakout. Wreaks Havoc banked $8,814. And my accounts up $2.69 million in 2025 alone. That's not luck, that's execution. Inside my Patreon, you get real-time trade alerts, every entry, every exit, every reason, daily market breakdowns, no fluff, just signals, my exact momentum system, the one I use to manage 7-figure positions, and access to the most disciplined investing community I've ever built. It's $30 a month. Instead of blowing that on bullshit, put it into something that actually makes you better. No pressure, cancel anytime. But if you've been watching for months and still haven't joined, you're not late. You're just not serious. Because you can scroll or you can scale, but you won't say you didn't have the chance.